Will XRP be used to facilitate Europe's CBDC? That's exactly what we're going to be asking and answering in this video. And the answer is yes and perhaps no in the way you may think. So what we're going to be doing in this one is we're going to be looking at a number of ECB published reports, findings like the Annex 2, which describes actually within it, and this is an official document, how XRP can be used for wholesale CBDC facilitation. We're also going to be looking at the difference between wholesale CBDCs and how they operate, and perhaps the digital euro that we got an update on only over the past 24 hours or so from Christine Lagarde. Now, the digital euro, and it's important for me to say this, does not or is not built on crypto. It's not built on blockchain. That is a major misconception in regards to the crypto space at large. You will find no evidence, contrary to what I am saying, as somebody who has spoken to central banks, and we've got some interesting things coming out for you guys next week. The digital euro is not built on crypto. It is very much technology agnostic. That's how these central banks approach this stuff. And they're not looking to utilize public distributed ledgers for their retail digital euro. However, they are looking to utilize, or certainly exploring utilizing, distributed ledgers like XRP. I'm going to show you all the evidence for that in this video, for wholesale CBDC programs and operations. And every central bank, certainly in Europe, but around the world, whether it's the Reserve Bank of Australia or whoever it may be, is right now exploring using DLTs for wholesale CBDCs, some even directly for their own CBDCs. That perhaps isn't the case as far as a digital euro, or it isn't the case that they're going to use cryptos for the digital euro. That is a major misconception. I've actually heard that directly out of the mouths of central bankers. But they are looking to do something with distributed ledger technology for CBDCs more broadly in the form of wholesales. I'm going to be showing you that that's all been documented, and every central bank is not just working on the CBDC side of things or the digital, euro, the digital Australian dollar, the digital pound, whatever it may be. They're also looking to implement wholesale CBDC programs. We see that with the Reserve Bank of Australia. They're looking to use Hedera, for example, or certainly piloting elements of Hedera. The UK have launched the kind of crypto initiative that has Hedera on the board. And actually, we're going to show you some documents in Europe where they are looking at the likes of XRP to essentially be used or certainly experimented with for wholesale CBDCs. We're going to show you all that. The first place to start is with Christine Lagarde's update on the digital euro. I'll show you the difference and that these are different. The digital euro for retail it has nothing to do really with crypto. It may be able to be used in conjunction with smart contracts and things like this, but it's really just a Visa, MasterCard kind of style euro, effectively. And let's look at this update from Christine Lagarde. Then we're going to get into these documents that I have for you. We'll also be refreshing you. The Annex 2 was actually conducted with the Central Bank of France, which have previously looked at XRP and Ripple to facilitate a kind of euro currency. This might be how they're looking to do it. So let's dive into this update from Christine Lagarde and the European Central Bank.
Hello. I have good news for you on the digital euro front. Today, the Governing Council has decided to move ahead on the next and final phase of the preparatory work for the digital euro. The other good news is that on October 23rd, the European Council has asked us and all those involved to accelerate the process so that we can roll out the digital euro as early as possible. This is important because as much as banknotes will continue to circulate, we want cash to be in the form of digital euro as well, so that you can circulate banknotes and click cash with the digital euro. More work is going to be done in the next few months, and if we receive the approval by the European Parliament in the course of 26, we'll be able to pilot the digital euro as of 27. And if the pilot is conclusive and positive, it will be a formal rollout in the whole of Europe in 2029. This is a big project because the euro is our currency, your currency. It brings us together. It's a symbol of trust in our common destiny. So off we go with the digital euro in that next and final phase of the preparation.
I can, as far as my knowledge is concerned, and I've heard this from central bankers themselves, confirm that the digital euro is not going to be, it's not built on XRP's ledger or any kind of cryptocurrency. It's not a kind of blockchain project. It's literally a digital euro. It's a kind of euro that's enabled. It is what it says, you know, and this is a fact. Okay. However, central bank money can come in multiple forms. The digital euro is one of them that they're looking to enable, so that they can essentially be able to offer retail the option to use this over Visa, MasterCard, some of these other payment providers that are all American-based companies. And in doing that, circumvent sort of enabling the US hegemony that they have. It's very interesting. However, 2029, imagine where stablecoins are going to be at that point. And actually, with Mika, which came as a real combatant for Libra, Facebook's project, or DM, or whatever it ended up as, they are now coming up with ways for people to be able to issue the likes of stablecoins. One of the requirements is they have to be within the EU jurisdiction. That's why we're seeing Luxembourg, and I spoke to a financial planner from Luxembourg for the EU. That's why Luxembourg is really becoming the kind of a bit of a hub in regards to people registering there, like Ripple, that have an office there, and obviously are looking to get their sort of e-money license to be able to partake in Mika and issue stablecoins. We're going to see the rise of European stablecoins that we are yet to see, and I think Ripple as a company is going to look to facilitate that in the same way they do RLUSD, and that's going to be good for the XRP ledger. But just to distinguish the digital euro as a kind of central bank project to kind of digitize their money to more of a degree, it has nothing to do with crypto for now. Maybe it can interact with crypto, with ISO standards and things like this, but it's not run on crypto. It's not run on the XRP ledger or anything of the sort. However, we are going to be discussing how the European Central Bank and the banks within Europe, based on this paper, not this one, but one I'm going to show you in a second. This is kind of to set the stage and show you the difference in regards to the digital euro for retail payments. But for wholesale financial transactions, solutions for settlement transactions recorded on DLT platforms may be the case. And this may be where XRP comes in. In fact, the ECB, in this paper here, have actually spoken about the possibilities, or at least explored the possibilities, of wholesale central bank money settlement. So not retail, this is large value central bank transactions that will likely be enabled in the form of tokenization. They can actually take place on XRP, and this is where distributed ledger technology is likely going to be used by central banks. You're going to have the rise of stablecoins. That's not central bank money, that's privately issued money that I think the ECB should really be trying to enable to keep a competitive currency, to keep a competitive demand for their treasury markets within the various jurisdictions that are under the EU. The EU is going to have a harder time than I think a lot of other countries in sort of broadly implementing this, just because of the scope of EU nations. There's a lot of them, right? It's not a kind of... And if you look at implementations of regulations, they do often differ from jurisdiction to jurisdiction within the EU. But the topic of this is will XRP be used in Europe's sort of CBDCs? Well, it won't be used in the digital euro, I believe, but it may be used with CBDCs. And this paper very much explains it. It says the Euro system's exploratory work on new technologies for wholesale, central bank money and settlement. Okay, so we looked at the difference. Wholesale financial transactions and the retail digital euro. It's just the ECB's competitor to Visa and MasterCard. That's how you want to look at the digital euro. Coming in 2029, so it kind of doesn't matter. I think the whole space would have evolved a lot by then. And actually, you'd probably have seen perhaps a more dominant alternative to the sort of digital euro. Retail payments, retail and wholesale complement each other. So there may be an integration in regards to the euro, the digital euro, and more broad wholesale transactions. The executive summary here is this second annex to the Eurosystem's report on exploratory work on new technologies for wholesale central bank money settlement aims at exclusively describing the joint effort made by market participants, market DLT operators, the Eurosystem and other central banks involved, by showcasing the trials and experiments that took place during the exploratory work. I'm going to show you that the ECB has been exploring XRP. And there's a number of sources that suggest this, but this is very clear. Financial market stakeholders were invited to take part in trials, real transactions settled in central bank money, and experiments, mock transaction settlement in test environments in 2 waves. Back in November 2024, that was wave 1, and July to November 2024 for wave 2. The ecosystem or Eurosystem approved the participants over the 2 waves of a total of 60 stakeholders from the financial sector and 4 central banks. The participants there received national central banks and the 3 solutions providing central banks, Deutsche Bundesbank, Banca di France, which we'll talk about in just a second, and Banca di Italy jointly enabled 48 use cases to be conducted, including 27 trials and 21 experiments. In addition, the Eurosystem conducted 6 internal experiments not involving market stakeholders and 4 cross-border experiments with other central banks, bringing the number of activities completed to 58. The collaboration provided practical insight into a large and diverse set of use cases across the whole financial market value chain. The European Central Bank expressed its gratitude to stakeholders involved for the detailed descriptions and activities conducted that they provided for preparation of this annex. Now, it mentions Banque de France. We looked at, I think it was page 16. The Banque de France have actually spoken about using the XRP ledger in a CBDC kind of use case. If we look at this document here, it says Ripple and XRP enjoy the trust of many banks as a model for CBDCs because it is highly centralized and is based on a permission network where only certain network nodes can validate transactions, as opposed to decentralized and permissionless Bitcoin and Ethereum. It goes on to say Ripple also allows the creation of new currencies, and Ripple developers can decide the timing and quantity of supply in similar ways to current central bank operations. Note, France's central bank, Banque de France, has openly discussed Ripple XRP as a possible platform for Europe's central bank currency. Not perhaps digital euro, which is a central bank currency essentially. CBDC, a central bank digital currency, but perhaps I think in regards to being able to issue wholesale CBDC transactions, which is exactly what we find in this Annex 2. Exology, which is a company, they were at Apex 2025. I should have brought that up. Primary issuance of bonds by financial institutions, corporates, or sovereigns, and delivery versus payment settlement, in some instances also including life cycle management of security, coupon payment and redemption, and secondary trading. So Eurosystem interoperability solutions, trigger solution BBK, participants, issuer Axology as mock-up Minister of Finance, investors, mock-up participants of the Axology DLT TSS platform, DLT market operator is Axology. The use case covered the following scenarios. Scenario 1, debt security auction, primary issuance and settlement, coupon payments, maturity redemption of debt securities. Let's read this now. It goes on to say the Axology DLT trading and settlement system, TSS, is a private permissioned infrastructure built using the open source code of the XRP ledger. While Axology benefits from the XRP ledger technology, it operates as an independent system designed to streamline trading, settlement, and custody of tokenized assets, such as financial securities, with enhanced security and efficiency. The platform combines accounts, trading, and settlement processes into a single infrastructure, allowing for instant delivery versus payment settlements. This integration simplifies processes and reduces data loss, with an immutable ledger, ensuring, being XRP, a unilateral or unaltered transaction history. Axology also employs a risk management framework that addresses market integrity, investor protection, and financial stability, This is achieved through consensus-driven transactions, which removes majority agreements amongst networks nodes for validation. The platform limits on-chain functionalities to mitigate risk associated with human error, typically found in traditional smart contracts. It operates on an order book basis, which minimizes asset loss risk and maintains market integrity. The private permission DLT infrastructure restricts node connections to eligible financial market participants, such as licensed brokers and banks, who issue tokens and manage investors' wallets in compliance with EU regulations. One of its core features is the integrations of certain Know Your Customer KYC procedures, e.g. verifying investor identity to maintain accurate data. Investors can deposit e-money tokens into their wallets via secure bank transfers, supported by stringent authentication and authorization protocols. In cases of suspicious fraudulent activity or legal issues, the platform has the ability to freeze wallets to prevent unauthorized transactions. It then goes on to demonstrate this. This is scenario 1, which we're going to be looking at. It says primary issuance of debt security settlement on Axology DLT TSS using WCBDCs, wholesale CBDCs, and this would be like a European wholesale CBDC. Auction results are submitted by the broker's agent through their own Node API for distribution. Node creates an escrow wallet per each distribution list entry, adding at Axology operators as the only signer of the wallet. Further, we will consider only a single case as it's analogous for each distribution entry. Node sent asset amount from issuer operations or operational wallet to create escrow wallet, which uses XRP payment transactions. Transactions contain address of the final receiver, i.e. investor wallet, amount to charge them, and amount to transfer to the final beneficiary. Given cash leg was successful, operator nodes receive a notification about the escrow wallet payment transaction. Operator node initiates cash leg with detail provided in escrow wallet. Incoming payment transactions. Operator receives confirmation of successful payment transaction. Operator transfers amount of assets from escrow wallet to the final investor wallet using XRP payment transaction, and thus finalizes DVP. And this ultimately is the whole process. These are the escrow wallets that you can see, and this is essentially how all of this works. XRP very clearly being utilized in facilitating wholesale CBDCs, and again, this report was published by the European Central Bank, that are not just exploring the digital euro, which, as stated, does not leverage distributed ledger technology, at least in regards to how it's built, but in regards to wholesale CBDCs, they are actively looking at market participants, and we've just shown you a market participant that essentially is looking to leverage the XRP ledger. And this is how the likes of the European Central Bank could essentially choose to leverage XRP via wholesale CBDCs, not the digital euro per se, providing that the digital euro remains in the manner that it already is and doesn't change from now up until issuance in 2029. And by that point, I actually think that there's going to be a bit of an issue in regards to, or it could have lost a lot of ground, central bank money, to the likes of stablecoin issuance, of which Ripple is likely going to be one within the EU. So I just wanted to clarify that. It's my opinion that the digital euro has nothing to do with cryptos, certainly public cryptos. It's just a kind of digital payment system like Visa and MasterCard that's enabled by the ECB. However, in terms of central bank money within the ECB and its jurisdiction, all central banks are essentially, or most of them are looking at wholesale CBDC facilitators that actually do leverage distributed ledger technology. And we've just shown you an ECB paper, Annex 2, that is exploring XRP as that DLT technology to essentially enable that wholesale CBDC settlement. So that's it from me. Interesting. And yeah, I want to love and leave you on that note. I do think the world that we're moving towards is one where XRP does play a major role across multiple jurisdictions because it can be leveraged to sort of enhance the overall financial system. And I think this is a clear case of that. That's it from me, guys. I'm going to love and leave you. Thanks, everyone, for watching. I'll see you in the next.